The following is a production of Texas Lutheran University. For more information, please visit tlu.edu.
Dave did a great job of sending me a bunch of questions. Dave, that the students had of me, but I figured we'd start this off. These are students, so I get to play professor for 3 questions. So, and the people that get...
I'm not sure your microphone's on.
Is it on? It is on.
You turned it on.
Oh, it's for the camera. Good thing you are sitting close. Okay. I believe we also have a sort of a business ethics class, don't we? And if I were running the place, this would be the book that would be the required reading. So I'm going to ask 3 questions. The people that answer the questions get a book for their answering it. My first question is a very simple question. The news media can't get it right, so maybe you can. Who owns the Federal Reserve Bank?
It should be independent from the government. It should be independent from the government,
Nope.
but
It's not.
it's not taxable.
It's a, yeah. It's a quasi, but it's owned.
U.S. Treasury,
Nope.
with all the other independent banks.
That's the closest answer. Anybody?
Non-governmental agencies,
Nope. Then he's got the closest to it.
member banks that buy shares of the Federal Reserve. They put their deposits and get a certain amount of shares, and so they're a shareholder.
You're both pretty close. Let me tell you the answer. The Federal Reserve Bank was chartered in 1913, and it was because of all the many problems we've had nationwide in those days. And that is a corporation that is owned by all the national bank members. A national bank, which ours is a national bank. Our name is Business Bank of Texas, N.A., stands for National Association. If you're a national bank, you're required to take 5% of the dollar amount of your stock and buy Federal Reserve Bank stock. And that's how the Federal Reserve was started in 1913, and every time a bank member comes in, that's what we get to do, us lucky people. Now, let me add a couple of things to it because I think this is important. I was telling the professors here that I taught money in banking, and a lot of people don't get the gist of a lot of things that happen politically because even though it's the Federal Reserve and it's supposed to stand alone, it gets played with. We did that in 1913, set it up, it's going fine. Where do you think the profit the Federal Reserve makes goes? It's supposed to go, if we're the stockholders, don't we get it? We do, but we only get a little bit. All the rest, and it is a lot of money, goes to the U.S. Treasury. It's sort of like a supplement to the income tax. So everybody badmouths the banks, and the banks are so bad, and some unknown group owns the Fed, and it's all a conspiracy. I'll hear all those stories, and I sit there going, golly, people, get it straight, understand what you're talking about, or don't talk about it. But the Federal Reserve, again, is owned by the national banks. We get about 1/3 of the profits back as dividends, and the rest goes to the U.S. Treasury. Now, here's a classic example of being messed with. Dodd-Frank. Have you all heard Dodd-Frank about the new law? Well, one of the things that came under that was a new law setting up a nationwide consumer compliance protection agency, bureau. And it's being run without a board of directors. It's going to have a czar. You all are aware that every state has its own consumer compliance. My youngest son works for the state of Texas Office of Consumer Compliance. So why do we need this agency? Well, politically it's expedient. We're going to save all the consumers from themselves. As students, I think you understand the problem is not saving people from themselves, it's educating people and they can figure it out. Well, guess what? That extra profit that went to the federal government from the Federal Reserve Bank, that now is going to go to fund that agency. And the predictions are that agency will be bigger than the IRS. And what's it going to do? It's going to protect you all from bankers. Okay, so it was sort of a tie. You guys share the book. Okay. This book is an excellent book. Again, it's definitely my version of, I think this guy hit the nail on the head about ethics and how it's done. The next question, this is going to be a harder one. What law separated banking, insurance, and brokerage? This one you have to be old like me, or like my dad. My dad was a bank examiner during the Depression. And that's what got me kind of interested in all these subjects we're talking about.
Wasn't there an act in 1933 that was passed?
That's correct. The Deagle Act, 1933. And it separated insurance from brokerage from banking. And why do you think they passed that law in 1933? Y'all remember there was a depression, right? Just before that. What do you think they passed that law? Normally we pass a law from things we learn. And what basically happened was they figured out that one of the reasons we had the Depression, those weren't separated. They were so unseparated, they look like they do today. Do you get that drift? We're back where we were before the Depression, and we haven't improved. I could use foul language. We haven't improved a thing. Seriously. Now, I guess nobody gets that. You may end up with a book. No, you did. I'm sorry. 1933 Glass-Steagall Act. Okay, now, taken off of the Glass-Steagall Act, why do I say the Glass-Steagall Act is no longer here? Y'all, I did say that. It kind of sounds funny. Well, I think I'm going to simplify this question as simple as I can. What two laws were initiated in 1999 that had the greatest impact to the 2008 financial meltdown? Can you guess just one of them? Or could you give me an answer like, we repealed the Glass-Steagall Act? That would be one of the answers. We actually repealed that law. Okay, I figured this was going to be a tough one. Two laws passed, 1999, and seriously, they were the beginning, besides what was going on in the mortgage business. Okay? The mortgage business and these two laws is what caused this. I'd do a 2-hour presentation going through all this. The point here is, maybe somebody might know the senator whose name was on one of these acts. He's from Texas. Yeah. You get two of them. We'll share it with him. He'll get the booby prize. Okay, here, let me give you a quick history. 2 acts. And this is where I wanted to make a point is politicians, both parties, can really make a mess of things. And to top it off, this gentleman's name, who is the number 1 on the list of the 3 senators that passed this, was an economics professor. And his name was Phil Gramm, from a place called A&M, from a state senator from Texas. The Leech Blily Act repealed the Glass-Steagall Act. You know why? This is really make you feel good about our politicians. In 1998, we had a blatant violation of the Glass-Steagall Act. It was so blatant, it didn't even get in the news. But it was, from a financial names, it was very blatant. It was in-your-face violation. A company by the name of, anybody ever heard of a company called Citicorp? They bought a company which I'm sure you might, they have a red umbrella. It's an insurance company. Travelers, right? Well, they bought travelers right out in front of all God and the whole world. They bought them in violation of the law. So what happened? Oh, the lobbyists got busy. And the lobbyists did their thing and found a guy by the name of Graham and a guy by the name of Leech and a guy, and they got a new law passed. Well, that law was just about as bad as the Dodd-Frank with its can't even say it. The rules it set in place was all under the idea of, again, protecting us, and it was to catch people who were laundering money and things of this nature. You might recognize it as a currency transaction reporting requirements and things of this nature. Again, don't ever believe what you hear sometimes. As an example, the other law was called the Commodity Futures Modernization Act. Whenever you hear the word modernization in a bill, be careful. That bill actually was going back to 1920s when we had outlawed what they called bucket shops, where people could take bets on the stock market and in essence insure, hey, you think AT&T is going to go down? Well, how much do you think? And I'll write you a premium. You ever heard of a company called AIG? That's the law that put them out of business, almost. They got into, we're going to take bets on the stock market and we're going to give you insurance. The lady that was head of the Commodities Commission, Federal Commission, was railroaded out by people by the name of Summers. What was our great leader at the Federal Reserve? Greenspan. And they railroaded her. They wrote, there's a documentary. If you all want to see some good documentaries on this subject, Frontline. Frontline did an excellent production of this. In fact, HBO did a great production of what happened during the meltdown, where our Secretary of the Treasury, Paulson, what he did and how they did it and what happened. And I think everybody should see it because it's in layman's terms and it's not as bad as everybody said it was. How many of you realize that I probably wouldn't be here talking to you if the Federal Reserve hadn't have done what they did during the meltdown of 2008? Seriously. They went out, the market that covered people trading securities in the market, particularly mortgage-backed securities, and those that, not all mortgage-backed securities are bad, but if you all of a sudden stopped trading in them, what would happen? And they brought all that onto their balance sheet, and they actually saved that market. Like I say, I could go for hours on these subjects that I think the general public is not aware of from the standpoint of the danger and how close we were to falling off a cliff. And if they hadn't have done what they did, I can look back in retrospect and say, Paulson, you did this wrong, you did that wrong. But if you'd been in his shoes, that's why I like that program. They kind of walked you through the problems. And one of the things that's helping us compared to Europe is we've got a centralized system. There are some advantages to it, and that's where it shows up the most. And the Federal Reserve, another example, if Europe had a Federal Reserve instead of 17 different countries and 27 of them that are in the treaty, it's the craziest thing in the world. And it ain't over in Europe by a long shot. So, and it's because, just imagine if all 50 of our states were set up with separate banking systems and banking and give you another real quick, I'm sorry I get on tangents, but real quick, I cannot own, or our bank cannot own debt of other countries. And in Europe, you've got banks that own Greek bonds, all these other, the thing is so intertwined, it's scary. All right. Any questions on that? I'm sorry to go so long because you all have 27 questions to ask me according to this list. Real quick, let me tell you what's different about our bank. I'm real active in the banking business. I've been on the board of the Independent Bankers Association of Texas. You're looking at the only board back. You all heard of home equity loans? Well, all the bankers back 10, 15 years ago were all excited about us getting home equity loans in Texas because I like the old Texas law. Homestead is a homestead and that's it. And I'm the only member of that board that voted against home equity going forward and lobbying for it in Texas. And today I'm on the Texas Bankers Association. And that's another thing unique about Texas. Got 2 different bankers associations. Not usual. And we have 587 banks in Texas, by the way, folks. And somebody in there said, we got too many banks. And my answer is, no, we don't have too many banks. We don't have enough. Because that's why we've got these too big to fail banks going. Do you all realize that Bank of America seriously would not be where it is today if it weren't for Texas? Most of you may not even been born yet, but when we went through our crash in Texas in '86, Bank of America made a fortune in picking up banks. They made a fortune. They got bargains out the kazoo. Give you one example of Bank One did in San Antonio. I had a friend that went to a bank called Northside Bank and said, regulators, we want to buy that bank. Regulators said, no, you can't buy that bank. He said, well, look, we got all this net worth and we can inject this capital. Still can't buy this bank. I think there's something about this transaction that was awry, but I'm not an investigator and I'm not going to take the time. Bank One got this bank. The facility, the physical plan of the bank was worth $3 million. They got the bank for $1 million with its deposits and none of the loans. And that's the kind of things that were going on with Bank of America, Bank One, all these banks that came into Texas. Even Compass Bank did well and they came in late. So Texas created a lot of bank net worth, added to the balance sheets of a lot of the banks that Wells Fargo did well through Norwest and others. So, I'm sorry, I could go on and on. I'm thinking about the Goodwill Rule in accounting. Who's the accounting? How many accounting students in here? Okay, do you all know the difference between the old Goodwill Rule and the new Goodwill Rule that FASB did? This is another thing that almost did banks. Well, it's still going on. FASB, tell me what FASB is. FASB. Anybody?
Financial Accounting Standard Board.
There you go. I knew the professor was going to jump right in. Do you know how much those people get paid a year to be on that board? They get paid $600,000. And who are they? They're Big Four, Final Four, whatever you want to call them. But what do you think they're doing? Oh, could you think maybe they're trying to come up with rules that might be beneficial to them and their ability to do business? AKA sometimes known as insiders in an indirect manner through regulation? They are. And I'm a CPA and I'm standing here saying that. I think they should be disbanded. They passed a rule. They changed goodwill. Goodwill, what is goodwill? Is it the extra dollars you pay over the book value for the business, right? Okay, do you think goodwill stays all the time? I buy Dave's business tomorrow. Dave leaves. All those relationships he has, do you think that they're all going to come stay with me, the goodwill part of it, and say, oh, Ed's, you know what's going to happen. Over time, I'm going to lose some customers. It's normal. It's what happens. The old law was real simple. Goodwill was put on the books, and you wrote it off over 60 months if you wanted to. Monthly installment. Write it off. The new rule is you buy the right CPA, you get the right CPA firm to come do it, and every year after that, they'll come and say, oh, the goodwill's still there. Oh, it's still there. It's still there. Wachovia, you know who that was, right? What happened to Wachovia? Are they still with us? Wells Fargo got them at a bargain. You know why? One reason was over 50% of their capital was goodwill. And they're not the only one. Majority of the banks were, think about this. As a banker, these are the things that we shouldn't be allowed to do. Do you believe most banks have lots of cash, lots of access to cash? I hope you do, because we do. I sit with a lot of money in the bank. I was talking to a banker in Houston. He has a $600 million bank. He has $100 million in Fed funds. Of course, I told him he was crazy. Either invest it or get rid of it. You know how much we're getting paid on Fed funds? The future, 6-month futures on Fed funds are 0.14%. Do you think I can make money with that? No. So anyway, we have lots of cash. So we can do little accounting tricks like the Goodwill trick all day long. All day long. I can go buy somebody, give them my stock if they're dumb enough. I mean, if they would take my stock in exchange. Or I could give them cash. I could be like that guy in Houston. I got $100 million in cash. So I give them the cash. I book it as goodwill. My capital goes up. The impact of that transaction could be phenomenal. What does it do for me? It raises my loan limit. It does all kinds of things for me. Yet it's been smoke and mirrors. And it's not going to go off the books. It's going to stay on there permanently if I hire the right CPA firm. So again, I can get on tangents because this industry needs to be regulated, but the way we're regulating it is not the way you do it. You got to have some people that understand accounting, they understand banking, and understand the problems with greed and understanding who can be trusted and who can be not trusted. And that is where our downfall's been. I could spend hours on that. Okay, sorry for the tangent. Real quick, what makes us different? Business Bank of Texas was a brainstorm. It really wasn't, no, that's not the right word for it. I was the chapter president of the San Antonio chapter of CPAs in 05 and 06. And I had announced my retirement. And I had, at that point, I had opened 3 banks in my career. And I could financially retire. But the people knew me, and they started razzing me after one of the meetings one day. Said, hey, don't BS us. You're going to do something. What are you going to do? And I said, no, seriously, I'm going to retire. My mom's 98, still works, runs her insurance agency, so I think it's in the genes. Then I started talking. I said, well, number one thing I would do different, I think the biggest mistake bankers make is they want to try to be all things to all people. They want to try to get all the business. It takes more people to do that. I said, we're going to follow the 80-20 rule. 20% of your customers make up 80% of your business. If you look at you talk to a CPA, you talk to any business person, in most cases, there's only about 20% core customers. In fact, one of the subjects you'll always see taught in managing a CPA firm is learning how to fire clients. And that goes with every business. Well, the simple way is, again, don't bring those people on. So follow the 80-20 rule was number one. Number two was that means only business people. In fact, when I was talking to the organizers originally, I said, let's call it Industrial Bank of Texas. And I was smiling when I said it because it's a little too gray sounding. But it's amazing how many people don't understand when we see the name Business Bank of Texas. I'll be talking to them, and they still don't get the drift. It's not Bank of Texas. It's Business Bank of Texas. That's all we do. It's business. The number 2 item that was so important, I said, was we're going to leverage technology. I had started a bank in '86 in San Antonio, and we were up to 5 branches. And it was in like 1990-something, 98, 99. And I said, no more branches. We're going to go, in fact, we were the first bank in San Antonio to be 100% imaging. You know what that means? You're going from giving people paper statements with the actual checks folded up in them and mailed to them, to here's the page of the statement, and the next page is the images of the checks. Okay? Well, you know how much you save in postage? It's unbelievable. Well, our bank doesn't even do it that way. We email it to you, and you get it. Okay? So the whole idea was to take technology and leverage it and use that savings and try to go backwards in time a little bit, back to when banking made money two basic ways, off their investment portfolio and their loan portfolio. Do you know what Bank of America's year-end numbers were this last year-end, if you broke down their interest income and their fee income? Half of their income was fee income. Half! Do you think they're going to get, it's kind of like asking about a dope addict, is he going to get off of that? So, nope. So here we go out, we set up this remote capture type system. How do you know what remote capture is? Okay, how many of you have heard of the, well, draw a blank on the law. It was a modification, actually. The Uniform Commercial Code was established nationwide and approved by every state in 1954. Well, in the old Uniform Commercial Code, you had to use a check. The actual physical check was your collection item. You couldn't do it without physically taking this piece of paper to the court and saying, hey, he gave me a bad check. Well, with the change in the Federal Reserve, this is another advantage of the Federal Reserve, they came in and got the code modified and supported it. And what it really basically did was take that image bank statement I'm talking about, and saying that picture of that check is sufficient. And so with that change, that put us in a position to no longer handle paper. We don't have to have a paper check. And we don't care where the paper check comes from. In other words, you don't have to bring it to the bank. You don't have to bring it to the teller and deposit it and wait in line. You scan it, it's your computer, you email it to us. Gee, that's your stuff. That's you guys. The young people here, that's the way it should be, right? You see the TV commercial where they take a picture of it? Well, we're doing the same thing. It's just using the computer and creating security and making it work. Well, that and ACH. You know what ACH is? The Automated Clearinghouse. Well, I'm going to give them another book. Automated Clearinghouse. In Europe, believe it or not, they're ahead of us. They do almost all of theirs electronically. Well, if you came to our bank and our website, you'd have 3 ways to do an ACH transaction. And you know what's unique about them? 2 of them are free. Do that with Bank of America. The third one we charge for, but we charge a lot less. I got an email this last month from a customer we converted in 2010 that does 35,000 ACH debits a month, and he does them on one day. Most of these people that are like that are insurance companies that are going after their premium as the customer authorized. That customer told me that this year, when they looked at their numbers for 2011, the cost of Chase versus us, we saved them $30,000. That's a chunk of change. And every one of them we put on is like that. We just moved one from Citicorp out of, the customer is in Dallas. Same thing. How come we can do this? We're using the most modern technology and no repeat, no branches. Now, there's another rule that should be changed within the banking. These are all rules that just need to be fixed. We don't need a dadgum senator, congressman to do it. We need the regulator to do it. I've done 4 bank charters in my life, and every time they're all national bank charters. And if you want to know why I prefer national, talk about it. But 4 bank charters, and every one of them I said to the regulators, the capital rule needs to be changed. It's not the amount of capital we're talking about, it's the amount that we can take of our actual capital. When we raise capital for a bank, it's actually money. I mean, it's a real thing. They will allow us to take half of our capital and put it in buildings, non-earning assets. That's ludicrous. We're brand new. Why should, in our case, we almost had $12 million in capital. That would have been a $6 million building. You know how much we spent on our overhead to set us up? $500,000. The rest of the money went into the investment portfolio, and it's earning money. What would that building do for me? I can see it earning me lots of money if I were renting it to somebody else. It's a non-earning asset, and we should not be allowed to do more than 25% of our building. If you all want to hear more, I can tell you the classic story happened right here in Texas. It was called a bank called National Bank of Commerce in San Antonio. 72, and this was before branching. By the way, you all may not realize this, but Texas didn't have branching until 1991. 91, somewhere back. And you had to do separate charters. So you set up a holding company and you did all these separate charters. NBC Bank had 72 separate charters. And every time they capitalized one, they went to the max, their building, and then they also had off-balance sheet, another accounting sleight of hand, leases for equipment and extras that they wanted to have. So these are the things that are wrong with our industry. And some of us aren't smart enough to figure it out. And we keep going down the road. Right now, for instance, this is a classic time to see where branching is suicidal almost. Since we opened our bank in 2007, what has happened to interest rates? Which way have they gone? It's real simple. They've only gone one way. Down. What does that mean to a bank? Not good, right? Because if you're in a banking business, I hate to say this, inflation, bankers love. I've been in this business so long, I can tell you, this is way before you all's time, sitting across the desk from a business person who was a sole proprietor, and he wanted to borrow money. This is during the Carter administration. I tell him, you have to incorporate. And he looks at me like, what do you mean incorporate? I have to incorporate to borrow money? I said, yep. I said, it's real simple. In Texas, 18% is usury, except lending to corporations. So you have to be incorporated because I'm going to lend you money at 21%. And that was a good rate. We were paying 14% on CDs. So that's inflation, and it's not good. But the banks made money. But anyway, back to our crazy rules and our keeping the bank. So our bank doesn't have any branches nor plans for branches. And people say, well, that won't work. You got to be in the neighborhood. Well, wait a minute. Business people, where's their neighborhood? Some of them have branches themselves. So what do they care? I've got customers that got branches all over the state. How do they make their deposit? Remote deposit. Somebody said, well, how do they get cash? Oh, we got to deal with a correspondent bank. It's called Wells Fargo. We have to designate the branch. They take their change orders to that branch. They get their change. And then the entry is posted to their account with us. So we don't have the overhead. Somebody in here asked how many ATMs you have. I don't know. I have no idea. But guess what? I belong to a network. I don't own one dead-gum ATM. But I can give you the best ATM service in the world. Golly, infrastructure is already there, so why do I need to go out and try to bump shoulders with the Visas and the MasterCards and all the rest of the people in the world? Interesting, isn't it? How many of you all have ever heard of a payroll debit card? Handy little booger, isn't it? It's just like a debit card. It works the same way. It's really a pseudo bank account. And that's how some of our construction people love it, because they give instead of going to each construction site and giving the employee a check, and then going to the next site and giving them a check, and then some of them get ACH direct deposit, and they do their payroll in one swift, simple ACH transaction. And from a legal standpoint, you don't even need a payroll account any longer, because why? You've legally paid them the minute the ACH entry is done. You don't have to go back and reconcile, well, where's this outstanding payroll check? And all this other. So it's a very handy system. Technology is at the point that banks are not physically needed, except for the occasional, I don't know. How many of you have been to well, you all are a different age group.
Why don't you let them choose their questions?
Yeah. Yeah, you all have a bunch of questions here. What are your thoughts about the typical bank? We have too many banks, don't we? No, we have too many branches. We don't need them. Why? Because of technology. I mean, Chase is showing you every day. Use this photo thing, and what's going to happen to the check? Debit cards replacing it, isn't it, in a lot of ways? ACH is going to really be the replacement. ACH is the sleeper. Automated clearinghouse is the real sleeper. And you've seen all these companies like Bill.com and these others. They're really going to go away if bankers do it right and provide that type of service. Our ACH service, for instance, is that way. You can go out and use it and there's no charge. If you went to other places, it'd be a charge. So questions? I'll shut up.
I have a question.
Sure.
How do you decide on your board? Do you have elections? Do you just pick people to be on your board? How do you
Well,
choose board meetings?
that's a good question because for a new bank, when you start a new bank, they put you in what they call a classification de novo, which means in Latin new. And you actually have to have your board approved as part of the charter process. Not just anybody can be on, particularly a startup bank. So you have to get them approved. And one of the things that's going to be the criteria is experience. And a lot of times they want experienced bank board members, not just experienced people, but they have to have served on a board. And each bank can use its criteria, but the main thing you got to remember about it is just like any other corporation. The shareholders really have the final say. But when you do the first time, when you first do a de novo, you have to satisfy the regulator, not your shareholders. And after that, then the shareholders can take over and elect. Our particular bank, we have several criteria. The biggest criteria for us is we have a dollar amount, and some banks don't have this, but in our bank, to be on our board, you have to own at least $100,000 worth of stock, of the original base value stock. You understand the logic behind that? Goes back to your trust edge, goes back to, I have skin in the game. That was another reason I think that our stock offering went so fast. When we went out, we raised our stock in 60 days. And basically what I think helped a lot of it was I stood up there and I'm saying, I'm going to be the biggest shareholder. How many banks do you know that the president of the bank is the biggest individual shareholder? Most of them aren't. I mean, they might get options or something. So we all have skin in the game. We are structured different too. For a new charter, we're a sub S. There's the new sub S laws are 100 shareholders. We have 85 approximately. And every one of them, the average shareholder owns $150,000 worth of stock. So there's no lightweights in this group. I mean, they're not $5, $10 a share type people. They paid, the price per share may have been. Also, another point I need to make to you all, just historic about bank stock that a lot of people don't know. This is for the accounting majors again. How many of you have noticed the way the equity section of a bank looks? Have you ever looked at it and said, how come you got common stock and then you have additional paid-in capital is really what it should be called, but it's called something else. But you have two areas in your equity section besides your retained earnings, and those are the actual dollar amount that was paid for the stock, but it's broken down in two places. One place it's what they call the common stock, and the other place is the additional paid-in capital. And this goes back to the previous rules back in the 30s. It's called double indemnity. And for a bank, they've always had this rule, and it was to be backup in the original intent of the law. And in after the Depression, they changed it. You used to be liable for it. In other words, it was $10 a share. I paid $10 a share, but I was liable for another 10, that reserve. And now it's additional paid-in capital. Well, my dad would tell stories about going into little towns. Remember, in those days, they didn't have FDIC insurance. So they'd close the bank. And if there wasn't any money left, nobody got their deposits back, their money back. And then the regulators would go to the individual shareholders and say, where's your other $5 or your other $10, depending on what the stock was, that double indemnity. Today, you pay it up front. Our shareholders and our shares save $5 each. They all paid $10 a share for it up front. So that's another high risk part of banking, and people don't think about it. So.
What is your bank's reserve ratio? Meaning,
Well, which reserve are you talking about? Are you talking about the reserve that I have to maintain at the Federal Reserve Bank against my deposits? Or are you talking about my reserve in my equity section, that additional paid-in capital?
the Fed.
The Fed. You know what? I don't remember. I don't know. But we meet it with ease. We have, that used to, you know when that comes into be of importance to a bank? Is when rates are up. Rates being so low today and the Fed being so easy, cost of money is, I mean, our biggest problem is not cost of money. Money is cheap. And we got people trying to find a place, because here's the big difference today than it was in the 30s. It's that thing called FDIC insurance. Do you know we have two types of FDIC insurance? Do you believe me? I don't think you believe me. What kind of insurance do we have with the FDIC that you understand? Somebody tell me what dollar amount and how is it covered? What? See, somebody's on it. Hey, yeah. Gee, you have two types of FDIC insurance today. Now, you originally didn't. I'm so old, I can remember when FDIC insurance coverage was, how much do you think it was when I first got into banking at the age of 19? How much? How about $10,000? $10,000. Today, it's $250,000. And it's $250,000 on time money. Money market, CD. We didn't even have money market and CDs when I started banking. We had passbook savings and checking accounts. Demand deposits are another thing entirely right now. They are covered 100%. If you had $10 billion in our bank in a checking account, you're covered. A little quick history on this. This was interesting how this came to pass. And as I recall, it's in that film that they did, that HBO did about the meltdown in 2008. But what happened was, again, as you know, we lost some banks, but we lost some brokerage. You know, we had all these problems. But the biggest concern that the Treasury had and the FDIC had was, what if we have runs on the too big to fail banks? Do you think it's going to be some of us in this room? No, it's going to be the big corporations, right? They're going to take their money and hightail it. So where do they keep most of their money most of the time? It's through the demand side of it. And to cover themselves, they said, well, gee, you know, we need to come up with this unlimited insurance. So they came up with it. And then they told us we could get out of it the next year. Well, to a bank, all of the too big to fail banks, and including names you'd know here, Frost was in it, of course, like all of us were. We were forced into it in 08. You were told you had to do it. The advantage for someone like us, the well-capitalized banks, our premium was a lot smaller than the premium for the lower capitalized, which are the too big to fail banks. That's their problem. They're undercapitalized. So they had to pay more. So the minute they were told they could get out, let me tell you, show me the door, I'm out of here, they got out. Well, when Dodd-Frank came back, and that's the only thing I can stand here and tell you that was good about Dodd-Frank, they forced us all back into it. And so in January of 11, it came back into effect. And I think it goes through 12 or 13. Well, we never got out of it because we think it's a great tool, especially for a business bank. It's a fantastic tool. Okay. Next question. I had a bunch of them. Come on. Y'all did good. I mean, there were several. Like one of them said, are you too old? How old are you? And why aren't you retired? I thought, dadgum, that's a good one. How old am I? Really, I'm, in your eyes, I'm probably 80 years old, right? No? Okay. 25, thank you. Getting deep in here. I didn't wear my boots. But age, it's not age, I think it's the way you think and you act. It's kind of like, again, I'm sitting there talking about this idea to a bunch of people, and then actually I talked myself into it. I said, gee, this is a good way to go, because we can really make this work. Because banks are a good place to make money. They really are, but too many people get in there and they get too greedy, and they just, greed gets people. But I don't think I will retire. As long as Dave's one of my directors, so as long as he lets me hang around. Of course, I'm a director with him, but that has a little influence. But maybe by the time 3 or 4 more years, I might retire. But the way it's going right now, we're finally breaking through and we're rolling. So I don't know about Dave, but this is an exciting time for us. We're very fortunate compared to our peers. I'm talking to friends all over the state, and I wouldn't trade places with one of them. We have no past due loans even. We have no non-accrual loans. We have no foreclosed loans. We don't have, and I can show you banks that like I said, we have some banks in Texas that will be closed. We closed 92 banks last year in the United States, and we're going to probably do the same thing again this year. They're drawing it out, but January already we've closed 7. So it's not over. Okay, we talked about.
Don't be shy.
Yeah, please.
What about Dodd-Frank's? How are they going to correct that? I mean, that's a disaster.
Man, how are we going to correct the health thing? I mean, everything we've gone down it's kind of like we see it all the time, even at the state level. We passed a new law. Well, damn, if we just enforce the old ones. Yeah. We passed a new law, and we made a new regulator. If we just let the regulators do their job, and if they do their job. Because really, seriously, the regulators have tremendous power. The regulators can literally, you think you're in y'all are business students, and we all think about business as that it's mine and I'm going to run it like I damn well please, right? Once you get in it, you see stories of that. Try that in a bank. And an examiner, the lowest level examiner in a bank can put me out of the bank. Physically say, you're out of here, you don't come back, and you don't get paid, and that's the power they have. So they don't need any more power. You don't think that'd get my attention if they do that? So again, we have the laws. We need to get back off. Go back to Glass-Steagall as an example. That would be such an easy fix. But instead, why? What do you think this happens? That's why we need to get the politicians out of the politics, or politics out of them, or however. They want the power that goes with doing a new law, when we already got an old one that does it.
Can I ask you a question?
Sure.
Do you think that banks should be allowed to sell home, auto, and life insurances, offer investment banking service, or like offer brokerage services?
No. That's what I just talked about when I talked about the Glass-Steagall Act. The beauty, TARP money in general has been paid back. You know what the TARP money was, right? That was the money that we used to bail out all these bad problems. And how did those guys do that? How did they get the money? How did they make such a fast return? They kept doing what they were doing in the first place, using other people's money to speculate in the stock market and other types of transactions, because they're not separated. You don't want those people to be together because they have power. But thank goodness they had it, I guess, for the short period, but it still needs to be taken away from them. It needs to be put back on a field where, as an example, I'm friends with Frost Bank. I was an advisory director at Frost. But they are in the insurance business, they're in the brokerage business. I don't think they should be. I like them, I think they're a well-run bank. But there's some things that we shouldn't be doing. I was going to comment on something that it was right down there. Anyway, it's a real problem, seriously. Think about it. Citibank and Travelers, you want both of those? I mean, I want to get insurance from an insurance company that's not influenced by a bank or vice versa. I'm sorry. I think that professions, it's just like, well, anyway, next question.
Someone who's not in the banking industry, could you explain to us some of the direct advantages of dealing exclusively with businesses and not like personal?
Oh, yes. I didn't even touch on that. if you were to go into Frost Bank, well, by the way, Frost is changing to a state charter from a national. You know why? All this stuff that's coming down in the Dodd-Frank law, all this consumer stuff, all this is going on. But here's the big advantage for us. Are you all familiar with the term called CRA, Community Reinvestment Act? Okay, that's another one that's protecting you. You didn't know that, see? Golly, you're being protected. You didn't even know it. But it's a law that makes sure that we don't overcharge you on interest, that we calculate the interest right, we disclose it correctly to you. And I'm at a school, I can't talk this way, but we're not going to put it to you. And if we do, it'll be put to us. So it's a good law. And it should stay in place. But it's gotten over here and it's gotten over there. And the main thing it was for was to make sure everybody does the right thing. Plus, don't discriminate. Well, I don't care what color you are, I just want to see green. Okay? So the point is, when they come to do our bank, you know how long our CRA exam lasted? 1 day. Why? All we do is business. We don't do mortgages. We don't do home equity. We don't do IRAs. We're a boutique. And why would you want to go to a boutique? Specialist. You take all of the loan officers in our bank, most, I hate to say it, they look a lot like me. Gray. I don't mean anything else. 2, their experience. There's 4 loan officers in our bank and an underwriter. The underwriter is as old as one of our officers, but the other 3 of us are old guys, okay? But all of those people could be underwriters. So what does that mean? We can answer your question. You want to borrow money, you want to do what? And if you give me enough information, we can give you a fast answer. Sometimes we can do it the same day if we get enough information. Try that with Wells Fargo, Bank of America, anybody else. So the whole idea is we're catering to one group, and I'm not wasting my time with Dave coming in wanting an automobile loan, or a guy standing at our teller line that doesn't exist. You come into when you drive up to our bank, you saw a picture of it. You all are internet people. You don't need to see that website. The first thing you do is, I've had people tell me, did you all ever open? I didn't know you opened the bank. I mean, it looks like it looks deserted. There's no drive-in. There's no cars parked out front except the employees, because the customers don't come there. I've got customers, I got one over on Highway 59, almost in Houston, a bunch of them over in Victoria. They never come to the bank. I had one show up out of San Antonio. He said, I came up just to make sure you were really here. And he said, where's your vault? And I said, you see those 2 doors back there? It's behind one of those. I'm not going to tell you which one. But one of the people that sits at one of the front desks is a teller, and we do some transactions. But just imagine what that does for you to be able to focus on that customer. One of those ladies that sits at the front, we're probably going to move her somewhere else because she's on the phone walking through people through setting up the remote capture and getting on the website and using the products that are out there. So the whole idea is to be as transparent as possible. Another first for us, this one really blew me away when we were working on it. When we went to the Federal Reserve and said we want to be a 100% electronic cash letter bank. You know what that means? That means no paper checks come in our bank or go out. Everything's electronic. And we assumed it, Check 21 is the term I was trying to think of earlier. Check 21 was the one that took imaging to the level where you really don't need to go to the bank. Well, when Check 21 came into place, I thought somebody else would beat us to it, or I just assumed it. Dadgum, this is neat. My background is I'm a CPA and accountant, but also I ran a computer center in a bank. And I thought people would run to this because it's paperless. But the big thing is not the paperless part of it, but you know how long it takes us to collect a check? Maximum 2 business days. Guess how many holds we put on people's accounts? 0. We have never put a hold on a customer's account. So You do the transaction, comes in the bank, it goes out, and guess what? If any of you ever experienced a return check? The old style was you'd get the paper check back in an envelope, mailed to you by snail mail, and you'd say, oh golly, I got to go collect this check. Doesn't happen that way. Within those 2 days, third day at the max, you'll get an email from us that's coming back and saying, hey, that check you deposited from Dave, I like to pick on Dave, he's bounced, which of course wouldn't happen, but it was an error. But guess what? Where's that original check? It's with the guy that made the deposit. It's sitting in his desk. One of them, after we'd been doing this for a year or so, one of them finally confessed to me. He says, yeah, I get those every once in a while. And he says, you know what I do? I just rescan the check, run it through again. He says, I call the bank first to see if it's good. If it is good, I just run it again. And he said 99% of the time he collects his money without any hassle. So anyway, this was our objective, real high objective for us. And Mary Ann, the CFO, went to the Fed and said, we want to be a 100% electronic cash letter bank. And the Fed kind of hesitated with her, and she said, you know, I was kind of taken back. What's the problem? And the Fed said, oh, there's no problem, but you'll be the first. And we go, the first? This is 2007, and we'll be the first bank. And you know how big the 11th Federal Reserve District is? Geographically, it's the biggest one. New Mexico, Oklahoma, Texas, and Louisiana. And this little bank sitting in Austin, Texas was the first one to be a 100% electronic cash letter bank. And we were one of the first ones to be what they call the Fed Advantage ACH system. And both those systems are so like this. And why a bank doesn't go to this, I do not understand. One reason, even the ones that have done it, the favorite trick of bankers, especially the big ones, they're always trying to figure an angle, is not to give you immediate credit. Think of the advantage there. Again, rates are too low to have that advantage, but if rates were higher, it's a tremendous advantage. I hold your $25,000 check for 3 days or 4 days. I've seen them as high as 10 days, but I collected it the next day. I get to use the money for a week. Yes?
I have 2 questions. First of all, why did you decide to start the bank in Austin? And also, how do you plan to grow the bank? What do you project the assets to be in 3 years?
The assets, very possibly, we're doing as well as we thought we would in a lot of ways, asset growth-wise. But I think it's possible for us to be a $100 million bank by the end of this year, definitely by the end of next year. And that's good growth. Another thing that's unique about the bank is until January, we only had 8 employees. We have as many directors as we have employees. And we were an $80 million bank. That's twice as many dollars per employee as what they call an efficient bank, which is $5 million. So we're very efficient by dollar amount. The growth of the bank is real simple. We are placing people outside of the bank physically. We have one in San Antonio as an example. Lad Roberts worked for me from 87 to 2000, about 13 years in San Antonio market, and I was in that market. And the two of us, mainly him, have grown that market where probably by the end of this year, it could be as big as the Austin market. The main reason I put it in Austin, personally, it's been a challenge for me because I thought I could commute to Austin from my home in Comal County. How many of you have dealt with Austin traffic? And we put the bank on the north side. Okay, but here's the main reason I did it, and I still don't regret it from that standpoint. There has not been a national bank in Austin for more than 10 years. And so I thought, some of the more sophisticated business people would say, gee, we're finally going to have a chartered national bank headquartered in Austin. Austin has been longer without an independent bank than probably any major Texas city. Example, San Antonio when we had the meltdown in the late 80s, about 5, including the one I was running, of the good-sized banks made it through that bad time in San Antonio. But in Austin, they lost every one of them. So Austin had to start over. That's why that 10-year gap. So that's the reason, the main reason I went.
Or is it just one of the
But the key thing here to remember is it doesn't make a difference where we are. Because I could work from my home, because that's what LAD does in San Antonio.
Okay, so as I understand, your strategy is that you're all, you don't have many employees and it's basically online. What do you think when Bank of America and, for example, Wells Fargo changed to your strategy? What would
They couldn't do it. They couldn't do it. The best they could do would be to set up a separate entity, and some of them already have. I don't know if you're aware of this, but people like Wells and Bank of America have what they call their ag lending group. A lot of them don't work out of anything maybe than, like in Dallas, a fellow I know works out of a Dallas office, but he's all over the United States dealing with ag loans. So it's the same concept that he's doing, we're doing, but ours is on a lower level. The big banks will not be able to do what we do. Now, I back up and give you a quick story. We've had John Deere Corporation in our bank 3 times. And they would buy us in a New York minute. Because here's what they don't have. And I'll make another comment about them. But they get the ag lending. You all may not be aware of it. They don't just sell farm equipment and lawn equipment and finance it. They do big time worldwide ag financing. From chemicals to seed to anything production-wise. But what they don't have, think about it. I told this guy's name was Leroy Starts. I said, Leroy, if you would just let me have a farmer in Nebraska and a rancher in Wyoming, I'll show you how easy it is to take his deposits. He said, oh, I understand it perfectly. And that's why they'd want us. They could have a bank and not only make loans, but get deposits. And they could do it without any physical plant other than some place. Another quick story, it was very interesting. One of my fellow Rotarians there in Austin, most business people catch this concept like this. The people that don't understand it are the bankers. This friend of mine worked for Edward Jones. I don't know if you all know how Edward Jones operates, but it's a real unique franchise. Anyway, every location makes deposits. And they're doing it for all kinds of different ways. And when he heard what I was doing, he said, gee, man, if we had one of those machines, we could just go to town and we could put one in every one of our offices. And I said, yeah. He said, well, I said, give me the name of the people in St. Louis to talk to. I called up the people in St. Louis. They said, you're right. We'd love to do that with you, but guess what? We couldn't find a bank that would do it. So we're doing it ourselves. That's how dense we are. So what they've done is within their own computer system, they've got one of these remote capture machines in every branch in the United States. They've split it up, I think, in 3 time zones. He was walking me through what they were doing. And they're dealing with 3 different banks. Just think if one bank had been thoughtful enough to say, hey, I'd want that and take the whole thing. But even Bank of America, that's one thing that you'll find, folks. Everybody thinks that those big city bankers are smart. No, put one word in front of it. They're greedy. Then go after the next, maybe. What angle can I cut? Seriously. Next question. One of you guys had a question, no?
You were talking about your 100% imaging in San Antonio, I think your first bank.
100% imaging.
Yeah.
100%. We had, Frost was doing imaging, but gave the customer the option.
How often do banks do that? I mean, I'm not quite sure about that.
Today now, I would say the majority of all banks image because it's, give you an example, the savings just on postage paid for my hardware, my software, and my physical plant makeover to house it in 5 years. 5 years of postage savings paid for all that. That's how much electronic, that's the difference here again with this concept. You get a notice from us, says your bank statement's ready. You go get it. It's on the internet. You get to see all the checks. And if you go on our system, you've got 2 years worth of history. And you go back and look up any check you want, any image you want, front and back. Why do we need paper? And we can help you without you having to pick up the phone and call us even. Like I was talking about on the ACH side, you can do an ACH on our bill pay system, and that system is outstanding. And then you could do ACH on the core system, and then the other one is a high-end, high volume.
Ryan, did that answer your question?
Yes.
Did it? Okay.
Doing the 100% online and imaging, have y'all ever experienced yet a problem like with security or with like fraudulent?
Good question.
All of it being online?
No, we haven't. And let me tell you one of the reasons why we haven't is that's again, I referred to Mary Ann earlier. She is like a bulldog about what we can do and what we can't do on our system. And we also use all the high-end, best product we have. We have a company that we use that does that and watches over it. We just finished our audit for the IT side, and the guy that went over it with the directors, his comment was it's the best he's seen, and he's seen a lot of systems, safety-wise, and core processing and protection-wise. In fact, that's another thing that was kind of a first. We weren't the first, but we literally can we could, I don't want to jinx this, but our building could burn down tomorrow. And in 4 hours, we'd be back up operating. And we could literally be doing it in my house, Mary Ann's house. We could even go to Dave's house if he has internet connection. But seriously, that's, yeah, we just get our little generator. But no, seriously, that's again, you all think about how compact computers, I mean, how much, we're right now doing a conversion. We're replacing everybody's hardware, our mainframe hardware, everything. We're getting faster, better, and cheaper compared to when it first cost. And we're going to go to the cloud. People go to the cloud. Oh, security-wise? Well, the only thing that's going to the cloud is our web, our email. But once we get that done, it's going to be very interesting to see how that works. But we're really excited about it. But seriously, we are, you got to remember, our whole bank's based on technology, so everything has got to be the top. But again, we're not wasting time with the little guy, where if you've been in banking as long as I have, most of your fraud happens in your business. When your employee, you trust them too much, you give them too much authority, or you give them carte blanche almost, and you have theft there. And then on the consumer side, a lot of it happens right in the family, not outsiders, when you add up the dollars. But so what are we saying is the people who have access to your money are the ones you need to watch the closest, not the guy on the internet, even the guy on the internet. Now, where the deadly, probably the most deadly place, in my opinion, is automated wire transfer systems. The automated wire transfer systems, people over in places like Russia have found out lots of ways to penetrate and have, I mean, they're accomplished. And the worst thing you can do as a bank, in my opinion, is take that totally to automation. And to give you an example, there was one bank that was hit in 3 days for $3 million, and it all went through the system. Every transaction was $1 million, and they let it go without anybody even questioning it. Would you let somebody wire money out of your bank for $1 million and not pick up the phone and say, hey, Dave, what's this wire you're sending out to Kosovo? What is this? Just, yeah, just, but I did that on purpose. But anyway, it's gone. Why would you automate something that's low volume and not even put a limit on it? I mean, I might do it, say, okay, we'll take, if I were Bank of America, I'd say anything under $5,000 wired all day long, or 25, but pick a number, but not unlimited. You can deplete somebody's account pretty quick. So those are the things that people, again, you want to stay ahead of the curve and have the good technology, but you want to cover the little bit of backside you have, and that's not a good way to cover it. That would be like telling your employees, think about it. Are you authorized at your business to move $1 million? Because that's what you did in your bank. You just allowed the computer to do it. Nobody touched it. And I don't mean touch it, just look at it and say, damn, a judgment call needs to be made here. And to me, the judgment call is minimum calling a customer. And that's one thing you'll find we do. We answer our phones, no automated phone system, and we talk to our customers. And you don't need them in the bank to talk to them. I mean, if you look on my calling card, you got the email address, you got my cell phone. I even give them my other cell phone. I have one for this area code 210.
You said you have a low number of employees for the most part, and then you said you answer all of your phone calls with an automated system. Does that ever equal a high wait time for customers?
Oh, no. Think about it now. I don't have a housewife calling in to see if a check cleared. And the next product we've already got the product, but we haven't installed it yet, is Positive Pay. You all familiar with Positive Pay? Positive Pay used to be a pain back when I was in the computer business, but of course that's, we just moved from stone tablets, so it wasn't that big a change. But no, but seriously, you would have big corporate customers, and they would send in a tape, magnetic tape, with all their checks that they had posted and sent out. And what you do is you match the checks that are coming in against that list they said they sent out. So you're positively verifying the checks. Well, with the computer today, you can take your PC and send that file to us. So everything's very fast. It's another product we don't charge for. You go to Chase, they'll charge you like you wouldn't believe for it. And all it is you've sent me your computer file of the checks. As an example, you could use QuickBooks. And if you gave me your QuickBook record of the check number, the amount, and the date, we'll match it against it when it comes in. And if something comes in it doesn't match, a flag goes off, we pick up the phone and say, hey, what is this check? It's not within the series, and its dollar amount nothing matches. It's a very good safety. Where I would have it if somebody were still using payroll, that's where I'd have it, because again, the biggest fraud comes from payroll. And it's not payroll your people, and it's not your controls. It's somebody that somewhere has gotten a hold, just like what happens with credit cards, numbers being stolen. Same thing, somebody gets an opportunity to make a copy of your payroll check, and then they counterfeit it, start passing it. Okay? So it's simple things still that are the worst.
Since you serve just businesses, what industries in the local economy are promising, which ones are struggling?
Oh, gee. To be candid with you, a lot of times it's the way the business has been run, because you would not believe, you all are sophisticated compared to some of the people I get to talk to. And I'm not saying anything bad about someone. What I'm getting at is that a lot of us know a business. Let's take an example. Man, I'm a great carpenter, and I can frame a house up faster than anybody else. But that's all I know. I don't know the requirements that I have to come under tax laws. I don't know the requirements that I need to do to run a business. I don't know a financial statement. And I will not go to an accountant or to a financial advisor or do any of these people that I need to have in my back pocket as my outside experts. And so I muddle through life and I get in trouble. And that's the most common thing I see. And that same thing happens with startup businesses. One of the things I don't know if I said it to Dave, but I said it to one of the loan officers. I said the classic question I get at programs like this, particularly young people, and no reflection, we all want to do better, but the hand comes up and they say, I got an idea. And I say, that's great. But that does not make you a successful business. I mean, you emulate somebody, or there's a lot of people that started off with the Google idea as an example, and some of it's luck, but the other side of it is capital. And in Austin, that's one thing that I've really had an education myself on that has just been phenomenal, is my experience in dealing with venture capital. Unbelievable, some of the things I've seen. I was in a company, the guy calls me up and he says, I want to talk to you. He said, you probably can't help. And I said, more than likely not, because I knew it was a venture capital deal. But I said, I'll come over and visit with you. They'd been in business 5 years, $37 million. And they finally had developed their product. It was a cell phone tower related product. And they had their first purchase order. And the venture capital people said, we're pulling the plug. 100 people, gone. And I hate to say that. That happens pretty often in Austin, things like that. Of course, I think there's less of that long term because they're pulling the plug sooner. But there is a lot of money in Austin that just really amazes you that goes on. And it's going to be an interesting, I'm not against venture capital. I don't take that as a negative. It's just that I can name at least 5 people that I know that are very good business people, but if you'd said venture capital to them, be ready to duck, because they said they'll never go back and do that again, because it's a tough game, and you think us bankers are greedy and things get a little wild. It really gets tough there. Please don't take these things as negatives. They're just experience and observation as a banker. Because one of the things that I need to really, really point out more than anything else is so many people look at a bank and think, again, I have an idea, I can go borrow money. We don't do startups. We might do a startup with a high net worth person, but we're going to make them put up collateral that's so liquid it's unbelievable. We are not venture capital. Now, you want venture capital, you can get it if you have a real good idea and you've got something that shows that it could work. And there's some real neat venture capital. I had lunch last year with a guy that's been in the venture capital of the telecommunication business. I'd love for him to come and talk to y'all. You would be enthralled with his stories, because he has been a home run success, but he's only done it in an area that he knew and he's worked with. And majority of his deals have done well. But again, think of the disappointment. I decided to start the bank. Give me an example. When we were doing this project, I get phone calls from people say, hey, we'll put up half capital and you can come in with us with our bank and you'll be a part of our holding company. And I said, if I wanted to do that, I'd just go to work for you. I don't want to. You own 51%, and I and the shareholders I bring on board own 49. That's not the name of the game. You do have to be greedy about the transaction. I don't just want to work. This was a project that I wanted to do because I think the idea is very workable and it works. So that's another thing you always have to watch is just be aware, think a little bit outside of I need a job versus an idea. Because again, that's another place I see SBA lending. I've written some articles about the pitfalls of SBA lending. People try to say they're a cure-all. They're not. Where does the SBA funds come from? How many of you think it comes from the government? Oh, good, you don't think it does, because it comes from the banks. They just have a guarantee from the SBA. And that program is deadly for many reasons. And there's an article out there, The Pitfalls of SBA Borrowing, that I wrote. Dave is the biggest contributor, though. I think. How many posts do you have out there on our website? 40? Probably. I know you're ahead of me. But there is a lot of good information out there on our website on the Business Resource Center side of it. Come on, throw some more. I am old, but I can still stand here and talk. I know they're going to sleep.
10 more minutes.
10 more minutes? You don't have to. You ready to go, go. Yes?
I'll ask a question. You talked about Europe and you made the analogy about the EU versus the Federal Reserve here. Do you think that the contagion problem over there is inevitable, that the banks are going to just start to topple from country to country?
I won't step out that far. Dave is probably more informed about it than me, but my response is the potential for Europe is a lot worse than us. And what amazes me is how our stock market and our side of the world can just kind of You know, have you seen what the stock market does? Every time Greece does something, it goes, wait a minute, what's Greece got to do with it? Look at Portugal. Look at Spain. Look at Italy. The pigs, as they call them. It's not over. And I hate to be the negative, but we're also moving that way with our own government. We're getting our debt too high. And
the budget that has been proposed.
What budget?
Well,
you see a budget?
Well, let me ask you this. If the rating agencies took that budget and they said, if you pass this, should they downgrade our?
If you asked them that question, they would.
Yeah.
They would downgrade it immediately. They would downgrade it. No.
It's so unrealistic.
Well, how many years has it been since we've had years like this where we've not had a budget? I mean, you all are watching history, and it's scary history. And
if the rating agencies downgrade us again, will it matter?
That's a good question, because one of the things that I see, seriously, this is an opinion, but I see that, let me give you a smaller version of this first. I grew up in a bank in Brownsville. Literally, I call it grew up because I started at 19. By the time I was 25, I was the cashier of the bank. Well, that cashier is the CFO at 25 in this little bank. Well, I left this little bank, we were 40-something million. 10 years later, I'm back as a CFO, and we're 350 million. Isn't that amazing? You know what it was? Brownsville, Texas. You know what it was? It was flight capital money coming out of Mexico. The Mexicans love two things in the United States, the U.S. dollar and U.S. land. And they moving. Well, that's what's happening worldwide, in my opinion, right now. Every time we see a crisis, who still looks the best? The U.S. dollar. Overall, I mean, just like the things we're talking about, the centralized bank, all the positives we have still outweigh China, Europe, the rest of the world. And so I think that the dollar will continue to do well. I think the Fed driving towards it. I don't know if you noticed this, but they just released the minutes of the last Federal Reserve meeting, and they're talking about a QE3. Interest rates going down again. Seriously.
How could it go down? It's down the bottom.
I'm with you. The twist impacted us in our investment portfolio, the little twist they did. The QE3s have hurt us too. Right now, if you talk to most bankers, you know what the number one subject is? I got to tell this story, it's real cute. One of our other directors ran into the chairman of the board of a bank out of Lubbock, but they have 6 branches in Austin. Won't give a name, but we went to lunch because he wanted to know how this bank worked. It didn't make sense to him. Typical banker. And we went through the whole conversation. The chairman and the president are sitting there, and all the time the president's only talking about one thing: interest rates have got to go up. Well, don't count your chickens on that one. It's 2 years at the minimum before they go up. And if we keep seeing this scare going on, the dollar is still going to be the place, and interest rates, I mean, think about it. We've got banks with deposits out the kazoo because people, why? FDIC insurance coverage. And I've had people tell me, I'll just put it in the demand account. I don't care about the interest, I just want the protection. And it's in dollars. So I still feel very strongly that we as a banking industry will continue to be very liquid. Not saying it's going to be good. Liquid, but no place to go, you know, dressed up, no place to go. So it's a problem.
Students at TLU engage in high-impact educational experiences that include civic engagement, aesthetic expression, critical thinking, and a focus on intercultural knowledge in a community that welcomes the interplay of faith and reason.